Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Monday the 22nd of July. There's a fairly quiet consolidation look to markets today, nothing too significant in terms of direction on the major plays. Euro dollar basically flat, dollar yen a little bit higher. There's a shade of dollar strength that's come after Friday's move, which was very choppy. Actually regained a little bit of dollar strength into the close after the back of the market unwinding those their positioning off the back of the FOMC's John Williams's comments, which were perceived to be sort of moving towards a far more dovish monetary policy, but then they unwound on the official clarification of that. Subsequently, we saw the Michigan sentiment data, which was positive, and that held the dollar as a rebound, and we sort of saw gold, for example, dragged sharply back to its breakout point, pretty much, and it's now currently consolidating. So markets are fairly much flat, but what you do have is a little bit of sterling weakness. The underperformance of sterling continues to play out. We've got the what is still highly expected to be the announcement of Boris Johnson to be the next UK Prime Minister this week on Wednesday. But in front of that, you've got a whole load of current Tory ministers who are resigning on the back of the fact that they're worried about Boris Johnson pushing for a no-deal Brexit, or threatening a no-deal Brexit, I should say. And subsequently, we're seeing sterling lower on the back of that, and underperformance continues. That is certainly helping to drive FTSE a bit of outperformance today. 0.3% higher against the DAX and CAC, which are both just 0.1% up. A little bit of rebound on US futures, but nothing really doing in terms of direction really across markets. The only other real aspect you need to be looking out for is the oil price, which has jumped a little bit higher over the in the early moves. We saw on Friday the escalation of geopolitical tensions in the Persian Gulf surrounding the Straits of Hormuz, and Iran taking a UK flagged oil tanker, and certainly that is one of the key factors that I think has driven the oil prices a rebound today. Whether it will continue to run higher could be driven by news flow, so watch out for that closely. But aside from that, very little real direction we're looking out for today. Now, there's no data out today either, so that's certainly not going to play into driving any real any real direction through markets. And we do have a speech by Governor Kuroda of the Bank of Japan this afternoon, so that could certainly have an impact on the yen later today, but for now we're fairly well consolidated. My chart today is the Euro Swiss franc. Now, what we've seen in Euro Swissy is this breakdown, consistent breakdown actually, ever since what we have is had through several, almost a year actually, back to August 2018 was a range, but that range broke down in late May. Subsequently, that breakdown was confirmed in June, but that breakdown point became a basis of overhead supply, and the resistance came in place and rallies were sold into. Now what we've seen is a very similar move coming as the market has broken down on Friday below 110.50, 110.55. And again, that breakdown point certainly now becomes a basis of overhead supply into a rally. And what you do have in the past week is a little mini downtrend formation that just currently comes in just a shade above that breakdown point. But tomorrow, that is where the breakdown point is as well. So we've got this overhead supply at 110.55. I think any technical rally, I think on a near-term basis, is going to be seen as a chance to sell. You could argue, certainly looking at the RSI, given the fact that the RSI again around the 30 mark, just a shade under 30, similar to where it was in June before it consolidated and rallied a little bit in mid to late to June. There again, it consolidated just underneath 30 and then decided to unwind back towards the breakdown point. So it would be the question of whether to chase this one to the downside or whether you wait for the pullback. It certainly seems as though historically the pullbacks are a much better opportunity because they do tend to come through the market in due course. Now what we've seen is MACD lines confirming the negative configuration with the bear cross there. The stochastics negatively configured as well. But as I said, is this the right time to start selling or chasing the market higher? Chasing the market lower, because that breakdown I think ultimately does continue this selling pressure. Look at the breakdown. It's dating back to Q3 2017, so that's 2 years worth of lows, new lows on this Euro Swissy, and further downside is likely. But is this the time to be selling into that move? So that would be the question you've got to be asking yourselves. Is this in terms of a timing point, is this the time at which it's the best point to sell on that chart? So with that in mind, I wish you good luck in your trading today. Please click here to subscribe to my YouTube videos, and you can also go to our website where you can join up for our trading webinars, and I'll speak to you later.